The UK tax system is a total mess. So in this video, we're going to go through what are some of the policies that the Labour government could adopt to fix the tax system at the next budget in a few weeks' time. And I think most importantly, we're going to be looking at what the left say, what the right say. So one of the most radical changes that Rachel Reeves could make to the tax code would be to scrap national insurance and instead merge it into a higher rate of income tax. It seems absolutely balmy that we had two different kinds of income tax because to all intents and purposes, that is exactly what national insurance is. It's just another income tax. But oddly, it's charged on different things to income tax. It's also charged at a slightly different rate, and so on and so on. So a quite straightforward solution would be to just scrap NI and incorporate it into a blended rate with income tax. And just to be clear, this doesn't necessarily mean that you just have to add one to the other. We can be a bit more sophisticated than that. But it does at least move us towards simplifying the tax system and makes taxes easier for the everyday person to understand. Remove VAT exemptions. The UK raises a similar amount of revenue from VAT when you compare it to other OECD countries. However, unlike other countries, the zero rate and exemptions are applied at an unusually wide array of goods and services in the UK. This means that the headline VAT rate in the UK is much higher than other OECD countries, amplifying how distortive it is. And this is what gives VAT in the UK some of the truly bizarre anomalies. And these rules just descend into absolute pandemonium. Now, we've been through a couple of examples of the insanity of VAT. Dried fruit or nuts sold in a bakery aisle are tax-free cooking ingredients, but if they're sold as snacks or confectionery, then they're taxed at 20%. Potato crisps are taxed at 20%, but there's no VAT on crispy snacks made from other things like tortilla chips or Twiglets. Any tax system that leads to thousands of hours and millions of pounds being spent on legal disputes over whether Jaffa cakes are really a cake, zero rated, or a chocolate-covered biscuit at 20% VAT, is a tax that needs urgent reform. Each year that the current system stays in place means more time, more money and ingenuity wasted on just these ludicrous disputes. So what could the government do about this one? Well, it's simple really. Just scrap every single exemption from VAT so that everything has VAT payable on it. But with one massive caveat, the overall rate of VAT. So whilst you're charging VAT on more items, if VAT was charged at 10% or 15% instead of the current 20%, that could be a really good way to make sure the overall amount of VAT collected is the same, but you remove the ungodly administrative burden, making sure that VAT is charged at the correct rate on the correct item in the correct circumstances. Capital gains tax rates. Now, I know we've discussed this one already, but the truth is there are a whole bunch of changes that they could make here, and it's going to have quite a few components attached to it. But the first thing we should talk about is how income from capital is taxed at a much lower rate than income from labour. Capital gains tax rates are between 10 and 28% depending on the asset, so about half what they are for income taxes. And there are a few options here. The first thing Rachel Reeves could do is she could bring in line capital gains tax rates with income tax rates. And this is certainly an idea that's been floated around. And the empirical analysis shows that aligning the UK's capital gains tax rates with income tax rates could significantly increase government revenue. According to a research for the Institute for Public Policy Research, such a change could generate approximately £90 billion in revenue over 5 years. The Office for Tax Simplification, with a super trendy name, has estimated that the alignment could raise about £14 billion a year. And this, again, has the added benefit of simplifying the tax system by treating income from wealth and income from work in exactly the same way. There's no obvious reason to me why someone who goes to work should pay more in taxes on their wages than someone living on income that they derive from their investments. And the Institute for Fiscal Studies recently said that it would be a positive measure for growth if it was accompanied by higher allowances as well. And this is where we get kind of into the nuts and bolts of it. It's not just a case of adjusting the headline rate. It's about tidying and trimming some of the edges and closing some of the absurdities that are currently in the tax code. Another capital gains related one, you could index capital gains tax. This is where you tax people but only on the gains that they make over and above the rate of inflation. Now, just work with me on this. I know the maths doesn't quite work out like this, but for the purposes of this example, just run with me. If you bought a house for £200,000 and then it increased in value by 50%, but if the cumulative rate of inflation over the time period was 30%, then you'd only pay tax on the 20% of real uplift in value. And by fully equalising capital gains tax with income tax and taxing only non-inflationary gains, That could potentially raise about 16.7 billion, according to a study from Warwick University. And the third one is capital gains are effectively forgiven when someone dies. So if we stick with the house example, the 50% increase of the value in that asset would attract no capital gains, and the person who inherits the home would take on the new value forward. And again, this will only really affect people who have a lot of assets to pass on to their kids, so generally favours wealthy people. But the critical thing is that you pay the tax when you sell an asset, and the fact of the matter is that people have much more control over their capital gains than they do their salary. So if capital gains rates increase, then people who can just choose not to sell those assets wait for a new government to come in who might roll back the reforms and then they sell. And just an important point on indexing, the way it works at the moment is you pay capital gains tax on the gain irrespective of the rate of inflation. So even if you're no better off in real terms, you still pay capital gains tax. You could take a look at council tax. As we've already discussed, council tax is a particularly bad tax. It's very regressive, very distortive, and only entrenches income and wealth inequality. But how could you fix it? We mentioned that a property in Burnley, one of the poorest parts of the UK, will end up paying about 1.1% of the value in their property every year in council tax. But because council tax is capped at £350,000, if you live in the southeast where property is very expensive, this means that people who live in parts of central London like Kensington end up paying just 0.1% of the value of their home. An easy solution to this is to just have a single flat rate of council tax. That way the people in poorer areas get a tax cut from 1.1% down to 0.5%, and people in more expensive homes just end up paying a little bit more. Because it is indefensible that the average property in Blackpool pays more in council tax than a £100 million penthouse in Knightsbridge. Another obvious solution is to uncap council tax, so that it bears more relation to the value of the property. And this argument seems compelling for any government, in particular a Labour government. And whilst Labour promised not to change council tax bands, they didn't say anything about potentially adding more bands. So you could have, say, a band from 350 to 500, 500 to a million plus. You get the idea. By adding more bands, you are not adjusting the bands, you're just adding new ones. You could scrap stamp duty. Given how bad a tax stamp duty is, the government could just decide to scrap it and find the shortfall in money elsewhere. It's conceivable that by allowing a better allocation of property, this would stop gumming up the housing market and the economy, giving it a much needed boost. But this one does come with a drawback. It's worth noting that there's plenty of analysis that shows that stamp duty cuts have sought to increase house prices. So whilst I think stamp duty is terrible and it should be scrapped, it's worth mentioning that this is a solution that would really have to be scrapped in line with other complementary solutions. So scrapping stamp duty but then building more houses so that you have this supply meeting demand and you don't get the vast increase in house prices. Or to match the shortfall, we could abolish stamp duty and add the more council tax bands so that people's council tax bills more closely match their valuations. And we could also abolish stamp duty and fund the difference by adding more council tax bands, as we mentioned. And just whilst we're here, let's also update the valuations more regularly so that it is fairer, because having it based on property values in 1991 is bananas. This is a slightly different solution to the stamp duty problem. You could abolish stamp duty altogether and then change council tax to make it fairer, calibrating that change so that the change in stamp duty doesn't just send house prices soaring. But we could go further. The really good, the really comprehensive and courageous answer is to scrap council tax, business rates and stamp duty, about £80 billion, and then replace them with a land value tax. And a land value tax is an annual tax on the unimproved value of land. This would cover residential and commercial and will probably be between about 0.5 and 1% of current market values. This means that the tax would be based on potential income that could be generated from the land, no matter what's currently built on it. You could reform environmental taxes. So the way environmental taxes work, like much of the tax system as we've discussed, is that they can be extremely complicated and have a plethora of unintended consequences. So reforming environmental taxes, which don't raise a whole lot of money for the exchequer anyway, and replacing them with a single carbon tax could be a great way to still make sure that big polluters are paying for the damage that they cause to the environment. And again, there's plenty of evidence that carbon taxes are really effective at reducing emissions and making sure that polluters make contributions to some of the externalities that they cause. Rachel Reeves could look at corporation tax. Economists have pointed out that the need to re-evaluate certain aspects of corporation tax in the UK is well overdue. While the UK has a reasonably low corporation tax rate among the G7, its permanent investment allowances are among some of the least generous across advanced economies, and they also create distortions that really hinder the UK's overall economic performance. One solution to this issue is making full expensing, which allows businesses to deduct 100% of their plant and machinery investment expenses from their taxable profits, permanent. And what this means is, as with our VAT discussion, by broadening the rules that you apply corporation tax for, you may actually end up receiving the same amount of revenue in corporation tax, but you've made the system much simpler and much fairer in the process. And you can then also potentially look to lower the headline rate of corporation tax. Again, charging it on a wider base gives you the option to potentially cut the rate. Debt interest payments. Under the current tax system, debt interest payments can be deducted from taxable corporate income, whereas equity financing receives no kind of similar treatment. This has basically meant that loads of businesses have loaded up on debt in order to save on taxes, and higher corporate indebtedness leads to lower investment, lower innovation, and greater economic volatility and sensitivity to interest rates. Curbing the amount of interest that can be deducted from taxable corporate income could be a really good way of addressing this issue. Charging national insurance on investment income. There was research that found that applying national insurance to investment income could potentially raise over £10 billion per year, because currently national insurance is just paid on income from work, but a new government could potentially expand the tax base to include income from investments as well. Things like dividends, shares, rent from property, interest on savings, things like that. This would equalise and simplify the treatment of different types of income under the tax system, and would basically ensure that income from wealth is taxed at the same rate as income from work. Because again, income is income. It doesn't make a whole lot of difference where the money has come from. Why should it be taxed any differently? Reduce the VAT threshold. So at the moment, a business that makes over £85,000 a year has to register for VAT. But this isn't only bad for the public purse, which misses out on VAT receipts from larger firms, but it's bad for the economy as well, since bigger businesses tend to be more productive. A lower threshold would mean staying as a small business is less viable and would move Britain more in line with other European countries. For example, in Germany, you need revenues of €22,000 a year to start paying VAT, much higher than the UK threshold. And the last one is, you could make benefits universal. You could just have fewer sets of benefits, and instead of going to the time and the hassle of means testing them, have fewer benefits that are more generous but are universal across the board. This is the sort of thing which they used to have with child benefit. It used to be no matter how much money the parents had, that they would still be eligible for child benefit. So, in conclusion, there's much talk in British politics of whether taxes are too high, too low, but nothing like enough about whether they're well designed. At every turn, poor design distorts taxpayers' incentives to work, spend, and is eroding productivity and leaving the country poorer. Some of these reforms will take political courage from Rachel Reeves, and if Labour can find that courage, then taxpayers will find themselves not only better off, but being taxed and treated more fairly.